What is going on, XRP Army? Welcome back to the channel. So we have some big news taking place right now with Coinbase. We're going to get into the XRP price chart. We're also talking about what's happening with Ripple's CTO predicting summary judgment for September. Could we see a resolution of the lawsuit sooner, as everyone wonders when the ruling is going to come? Also, we have to talk about Coinbase's shares jumping, and we're going to dive into the charts. We're going to share with you what's happening with BlackRock, what's happening with these these spot ETFs, because BlackRock's Bitcoin ETF application takes surveillance to the next level with what the SEC wants to basically track, monitor, manage, and control everyone's transactions in the centralized crypto space on these exchanges. And so we're going to dive into all of that in this video. Comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree through crypto, then you know what to do. Confirm it by smashing that subscribe button. All right, bull runners, welcome back to the channel. So there's 26,306 cryptocurrencies. We can see trending right now, meme coin city, right? Pepe, it's trending down 5% though, down 2%, Pepe 2.0, Chainlink 1.78%. Bitcoin not doing too much the past 7 days, just consolidating sideways. Same thing for Ethereum. And XRP, same thing. Nothing happening right now, but what's about to happen next is going to shake up the whole industry. And I'll explain why. Okay, because the XRP ledger, often abbreviated as XRPL, first launched back in 2012, marked its 11th anniversary in the past month. And overall, the number of new addresses added to the XRP ledger increased significantly, reaching 138,790, which increased 31% over the same period in 2022. In addition, quarterly revenue increased by 220%, and the recent quarter saw exceptional network activity, and the day's address activity is the second highest in history. And so as the XRP ledger continues to grow, when will this ruling come versus the SEC? The judge is taking her sweet time on this, but Ripple CTO predicts a summary judgment for September. And so David Schwartz, he made this statement in response to the frustration amongst all the XRP supporters, saying that I know waiting is annoying. We'd all love to have a ruling on summary judgment motions as soon as possible, but I wouldn't think anything was wrong, unusual, or strange until at least the end of September. And so pro XRP lawyer John Deaton said, I agree. On September 31st, Judge Torres would be placed on the 6th-month naughty judge list for the first time, and her decision would be pending over 9 months. I didn't review every case she had, but I didn't find any that were longer than 9 months, although one was slightly longer than 8 months. And so, this could be the longest case she's ever had, but none of them have gone longer than that, according to Deaton. He previously warned members of the XRP community not to contact the judge, saying that action would have no positive results, as people are writing notes, they're writing letters. But look at this. This was posted on Twitter by Edward Farina. He says, Ripple has been communicating with the UK government, and the document below features in the official UK Parliament website describes XRP for cross-border payments for instantaneous bridge between fiat currencies and the XRP ledger as a decentralized open source. Now, through their official document right here, and we do the Command F function, we type in XRP, it was mentioned 20 times plus in this 7-page document. So it's obvious that the UK is more friendly for crypto, and Ripple continues to make moves behind the scenes. And with Coinbase, everyone wants to know, when will XRP be relisted on Coinbase? Well, Coinbase's focus right now is, on getting through this lawsuit with the SEC and also working with BlackRock on the ETFs, because Coinbase stock soared after reaching a SIBO surveillance sharing agreement for 5 Bitcoin ETF applications. This is massive. So when we look at the chart on TradingView right here, coin is on the verge of a breakout, sitting at $89 right here. We see this resistance. However, on the RSI, it is in drastic oversold territory right here. And as you guys can see, it's at 80 right now. So I don't expect this to last for too long. Even if it pushes a little higher, I expect it to come back down in the short term, because we can see back in February of 2023, it reached $88 and then corrected back down to 47. The time before then on the RSI, it was in August of 2022. It was $118, then crashed all the way down to 32. And then the time before then was all the way in November of 2021 when the markets crashed and it dropped everything down. And so, in the short term, yes, this is awesome for coin, but a correction is due on the horizon here soon, because the RSI won't stay at 80 or above 70 forever. And eventually it'll come back down on the RSI. So just be ready for that. Again, don't buy, don't sell anything we're talking about, but shares of Coinbase jumped as much as 16% today. Why did they jump? Well, the crypto exchange reached an agreement with SIBO's BZX exchange to maintain a surveillance sharing agreement. So I'm going to talk about what that is. but for 5 of its spot Bitcoin exchange-traded fund applications. And the agreement was settled back in June 21st for each of these applications, and amendments to the original filings filed with the SEC on Tuesday showed the earlier filing stated that the exchange is expecting to enter in a surveillance sharing agreement with Coinbase. And so, does that mean that Coinbase is selling out to the SEC? Well, their hands kind of being forced to, because the surveillance sharing agreement, also referred to the SSA, has become an integral part of all ETF applications filed recently. The SEC has stated for years that these agreements are necessary to prevent market manipulation, basically meaning they're necessary for the SEC to have more control. NASDAQ, the securities exchange behind BlackRock's Bitcoin ETF application, also reached an agreement with Coinbase, on June 29th. And right here, BlackRock's Bitcoin ETF application is taking surveillance to the next level for their customers and their traders that are planning on participating in this if they get approval. Because the moment that finance giant BlackRock filed to create a Bitcoin ETF, and this is important for XRP, I'm going to get in the XRP chart here in a little bit, but in the US market, watchers wondered whether the world's biggest asset manager had a better chance of approval than all the other rejected predecessors. They quickly fixated on the mechanism within the application that allows suspicious trades to be flagged to the authorities. And BlackRock's application sparked a flurry of follow-on filings, with the now ubiquitous surveillance sharing agreement added. What's more likely to influence the U.S. Securities and Exchange Commission's decision is an extensive, informative information sharing deal that flips the position of power in the arrangement and gives regulators the right to demand extra background. So obviously, like the Bank for International Settlement says, they'll have the technology to enforce control that they want, while the SEC's requirement for surveillance sharing to prevent market manipulation of crypto is not new. It first appeared in the Winklevoss Bitcoin ETF application back in 2017. And this was shared with CoinDesk. If we look right here, the nuanced point here to focus on, it can be characterized as the difference between push and pull, because the SSA concerns data surveillance carried out by the spot exchange, Coin, in this case, which can be pushed to regulators, ETF providers, and list exchanges if deemed suspicious. Information sharing agreements, in contrast, allows regulators and ETF providers to pull data from the exchange. So the information in question could be about specific trades or specific traders, and the agreement also compels a crypto exchange to share data up to and including personal identifiable information, such as the customer's name, the customer's address. And information sharing agreements, do not appear in any of the spot Bitcoin ETF filings. So that's why the SEC has been not approving them, but the structure is found in other markets. So an important caveat is then information sharing request has to be very specific, and it's not dissimilar to a subpoena. According to people that are familiar with the matter, it can't just be a fishing expedition where it's all of the information attached to any trade that was made between 2 given points at a time. And if we look here, the obvious concern is that crypto traders, almost by definition, don't like having information shared about them. Obviously, that defeats the purpose of decentralization. But for ETFs to be approved, they have to do it, because how would they get approval from the SEC if they want that? And CBOE's BZX exchange named crypto exchange Coinbase as the market for its surveillance sharing agreement. And when it refiled its spot Bitcoin ETF application for several would-be Bitcoin ETFs issuers on Friday recently. So Fidelity, WisdomTree, VanEck, ARK Investment, Galaxy, Invesco, and BlackRock all filed for spot Bitcoin ETFs over the past few weeks, hoping to succeed at launching a product the U.S. Securities and Exchange Commission has rejected for years. And while BlackRock filed with the NASDAQ, the other companies are working with CBOE. And on Friday, the SEC told NASDAQ and CBOE that their applications were inadequate because they didn't name the market that the fund sponsors are working with on their surveillance sharing agreement. And so the SEC has called for surveillance sharing agreements with markets of significant size in the past, arguing that this is necessary to prevent market manipulation, other unwanted behaviors, and to protect consumers, which, based on the lawsuit against Ripple Labs, obviously that's not their goal to protect consumers. They just want the control. They want to be able to see everything. And the lack of these agreements figured heavily into many of the SEC's prior rejections of Bitcoin ETF applications. And so the SEC will kick off an initial 45-day review period when it publishes the filings in the Federal Register, the national logbook, but it can extend this to a total of 240 days. So when we look at the chart right here of Bitcoin, we can see 45 days to 240 days. I mean, that puts the clock out to August of 2023 for 45 days, but 240 days would be March of 2024. So could we see an approval for these ETFs, spot ETFs, within this time frame right here? So Bitcoin, based on my video the other day, I mentioned how Bitcoin could be rallying here soon based on what's happening right now with these ETFs approval. However, I do feel there will be a correction at some point in the near future back down to the 200 moving average that you can see right here in red. So as Bitcoin continues to grind out sideways and the 200 moving average trends upward, at some point I do feel Bitcoin will intersect this. Now, whether that happens by August of 2023 or sooner, if Bitcoin can hold it together, and it can hold the key support floor of $30,000. If it holds that, then I believe a push to $33,000 to $36,000 could be in the books, because that's a major resistance zone all the way back from January of 2022 and February of 2022 that Bitcoin has yet to tap into just yet. And Bitcoin is hovering right at the resistance of April of 2023. So a break to the upside, because we've been in this sideways trading action since June, the end of June. So if I were to measure this out, when Bitcoin ran upwards of $25,000 and we've been sitting here for 21 days, almost a month, we need a decisive break to the upside or to the downside. If we break to the downside, I believe a correction back down to 26 to 27K would happen. A break to the upside would be right to 34 to the 36K. I think we'd tap out at 35K and then we come back down a little bit. Now, here's one thing that I want to break down too as well. This yellow chart that you can see right here is the dollar. So the dollar, has been moving inversely to crypto on a macro perspective, and compared to XRP as well too. If we go ahead and we pull up the dollar, right, we see the dollar's chart isn't looking too hot right now. The DXY peaked out at about 114 back in October of 2022, and since then, it's crashed downwards. And the real key here for the dollar is what's going to happen next. We see the symmetrical triangle here. If the dollar breaks to the downside of this symmetrical triangle, it could get pretty nasty for the DXY, which would be good news for the crypto market, because, the dollar's decline is bullish for, gold, silver, crypto, stocks, all of that stuff. But that doesn't mean that this will happen anytime soon, because we see the 200 moving average right here, curling over right now. And so a correction in the dollar and a bounce for the dollar up to the 200 moving average, I could see that happening in the short term as we stay in this symmetrical triangle for a little bit longer as we get closer to the FOMC meeting for the Fed. And I'll explain what I feel is going to happen in the near future. But I do think a bounce for the dollar is going to happen here soon. And the reason why is we're looking at the RSI. We can see the RSI is at this support since November of 2022. It's bounced off of it every single time since 2022. It hasn't dipped below it. If it dips below it, I think the dollar is gonna crash and crypto is gonna absolutely surge. But if it holds it, if we see a bounce here from this support where we're at right now, maybe a little bit lower down to 101.239, give or take a few points right here. But if we go down to that, I think a bounce will happen relatively soon for the DXY. Now for XRP, if we're looking at XRP's price chart, with the lawsuit being extended to September now, we see the 200 moving average for XRP. XRP needs to hold this red moving average right here. It's in this falling wedge formation right here. And if we see a break to the upside, my price targets for XRP, again, don't buy, don't sell, would be 52 to 55 cents before we see some resistance within this range right here. If XRP breaks to the downside and breaks below this 200 moving average, I think XRP could fall between 38 cents and 40 cents within this range right here, which acted as support all the way back in March of 2023. We see January of 2023, even December of 2022, November of 2022, September of 2022. So this is a very strong support floor right here, an ascending support for XRP. So I believe a rally in the dollar temporarily to the 200 moving average for the dollar, followed by a decline in crypto in the short term. Could happen. It could happen. Now, that would be based on what the Fed does moving forward. And I'm going to show you guys based on the macro trends right here. Don't mind the Snickers ad right here, but the Dow to gold ratio and also the stock market compared to gold, compared to what's happening right here. Because we look at gold, gold's also in a falling wedge formation right here. It's breaking out right now, but where could gold rally to in the short term? Because it's almost down to the 200 moving average. If gold, breaks, if this is a fake out for gold and we see the dollar rally, we see, gold push up a little bit, but then we see gold drop down real quick to the 200 moving average in red as the dollar rallies, I believe we would bounce off of that and we would see a retracement for gold back up to, the 0.5 to the 0.78 within this range right here for gold. I'd expect gold to bounce all the way back to $2,000, as the dollar gets rejected from the 200 moving average. So if I go back to the dollar right here, the DXY, I would expect if the dollar bounces to get rejected from the 200 moving average, which would coincide with this descending resistance that you guys can see, March of 2023, June of 2023, and then in the near future, whenever that would hit that, coinciding with the 200 moving average, the dollar would get rejected from that, and it would just stay within this range right here. And as the dollar rallies, gold goes bearish, and we see the Dow, make or break moment for the Dow as well too. And so the dollar traced up to the Dow moves inversely as well. We saw this massive rally, upwards of October of 2022 for the dollar, while we saw the Dow drop from 70 all the way down to 43. And then conversely, when the dollar crashed, the Dow rallied, and now we need to see a break to the upside of this descending resistance right here, as you guys can see. And a break to the upside, we could see a push back to the 0.618, 0.786, between 56 and 58 right here on the Fibonacci retracement for the Dow. And so if the Dow rallies, then crypto would be rallying if we see a break to the upside. Now be careful of a fake out here, because sometimes if we see a break to the upside right here, faking people out, we could see it drop back down within this zone. And that's if the dollar continues to dip down a little bit further while the Dow rallies and crypto rallies and Bitcoin rallies and XRP rallies within this range, and then we get slapped back from that. So I just be careful. It's going to be volatile over the next few weeks, next few months, obviously, as BlackRock, all these big companies go back and forth with the SEC. Coinbase faces their lawsuit, Binance faces their lawsuit, and it's all part of the plan to basically delay this bull run for as long as possible so the elite of the world can accumulate as much crypto as possible and shake out the retail investors. They want to the more that they scare the retail investors out of the markets, the rich get richer, the poor get poorer, because, when there's blood in the streets, what do the rich do? What do the wealthy do? They buy, right? When there's blood in the streets for most retail investors, what do? They get out of the market. And so for XRP, I really don't care what happens in the short term. I don't care if it goes up. I don't care if it goes down. I don't care if it consolidates sideways for a little bit, because ultimately I know that the dollar is doomed long term. The Federal Reserve has nowhere to go. They basically trap themselves. And if we look at the Dow to gold ratio, this chart basically shows the number telling you how many ounces of gold it would take to buy the Dow on any given moment. Previous cycle lows have been around 1.94 ounces in February and 1.29 ounces in January. So when the number is above 15, that means that it's smarter to be selling stocks and buying gold. When the number's below 5, it's smarter to be selling gold and buying stocks. So we're at 17 right now. So in terms of the stock market, I'm not diving into stocks right now. I believe gold is going to be a major winner. Gold and silver. Silver's a little riskier, but I believe in silver because of it being used for virtually everything. It's actually physical, and it's something that's not going to go away, right? It's God's money, so silver's going to be around long term. But in terms of what the Fed's going to do, this is interesting. Look at this. The CME Fed Watch tool, 14 days, 21 hours, 92% for this next meeting are expecting a 25 to 50 point rate hike. And then we go to September, 70% are expecting a 25 to 50, whereas 24% are expecting a 50 to 75. And the Fed has made it very clear that they're going to continue raising rates, which makes it more expensive to borrow money. It could push the economy into a recession. And here's some predictions right here. Prediction number 1, we'll still be in a bear market by year's end. This is on Motley Fool. And prediction number 2, the U.S. will fall into a recession by 2023. And this is likely an extended inversion of the Treasury bond yield curve. And so if I open this up in a new tab, I've talked about this in previous videos too, guys. This shows the 10-year Treasury minus the 2-year Treasury. And because it's been inverted for a period of time now, what does that mean? Well, if we look all the way back from when it inverted back in 2005 until 2007, we didn't see the subprime mortgage crash until 2008, when the curve went drastically in the positive and it spiked up real quick. Very similar, from February of 2000 until November of 2000 right here, December of 2000, it was in the negative. Once we saw this spike up, then we saw the crash leading up to 2003. And so the past couple times that this has happened, that it's gone inverted, we're the largest that it's been since 1980, right? So the crash that's coming on the horizon for the markets, it's anyone's guess here, but it's not when this yield curve goes inverted. It's when it comes out of this inversion that investors have to be cautious for. And so right now, because we're sitting at negative 0.84 on this, it just means that people are not really excited about being risk adverse right now. They're looking at, storing some precious metals. They want to store some, silver. They want to store some gold. And that's why the elite of the world are getting into crypto as well too, even though it is more risky. Through the ETF, spot Bitcoin ETF filings, it might eliminate some risk in the minds of their traditional investors that they have doing like 401ks and Roth IRAs, pensions, and all of that stuff that look at crypto as this fugazi thing. But the fact that BlackRock's diving in is massive. Number 3, the interest rate yield curve will reverse its inversion during the second half of the year. And on the other side of the aisle, fully expecting the yield curve inversion to correct itself before crossing the proverbial finish line into 2024. And Wall Street investors tend to be forward-looking, and there should be better clarity on the path forward for the U.S. economy and Federal Reserve monetary policy as we near the end of the year on when they're going to be pivoting, pausing, and then lowering the interest rates. Arguably, the biggest beneficiary of the yield curve reversing its inversion would be the mortgage real estate investment trust industry. As short-term borrowing costs fall and or long-term yields rises, mortgage REITs such as Annaly Capital Management and AGNC Investment should benefit from the beneficiary net interest margins. So number 4, the U.S. inflation rate ends the year far below expectations. And so what they've been doing raising the rates has been lowering inflation, which is good news. But when you look at the job market, unemployment is still relatively low. Unemployment needs to go up to drop that even more. And so lots of people are going to need to lose their jobs. But if there is a bright spot to possible economic weaknesses in 2023, is that the U.S. inflation rate can more quickly back off the 40-year high of 9.1%, registered back in June of 2021. In particular, recessions tend to hit energy commodities pretty hard, with crude oil and natural gas both soaring last year. A significant decline in one or both commodities could substantially reduce the inflation rate. But don't get your hopes up. A rapid reduction in the inflation rate is unlikely to alter Fed monetary policy. Fed Chair Jerome Powell has been clear that the central bank is willing to sit on higher rates for a longer period to ensure inflation is well under control. Because, as inflation dips down to their 2% target, well, would they just go and jack them back up again and risk running it back up, or would they want to keep it there? Obviously, they'd want to keep it there. And so the pivot might come a little bit later than everyone would expect. But prediction number 5, healthcare will be the top performing sector in 2023. Prediction number 6, gold mining stocks will be among the best performing industries. So that goes in line with what I believe. Gold's going to perform super well. Number 7, energy stocks will struggle following a strong year. And why would that happen? Well, one consideration is that oil and gas prices already pulled back in the second half of 2022 without much of a dip in the share prices of oil and gas stocks. When investors wise up to the disassociation between energy, commodity prices, and oil and gas drillers over the past couple months, the results could be ugly. Number 8, Apple will fall below $100. That would be interesting. Number 9, Toyota will close out 2023 as the world's largest automaker by market cap. Number 10, China stocks will vastly outperform U.S. stocks as the shift of power takes place. So what are you guys' thoughts on those predictions right there? What do you guys feel is going to happen with gold? What do you guys feel is going to happen with the stock market, with the Dow? As people, do you think the Dow is going to do something like this? Do you think it's going to fake everyone out, rally up, maybe come up to 56, maybe up to 60, and then correct? Do you think that could happen? Or do you think we're going to go into a massive stock market rally? We're going to go into a massive crypto bull market rally. The dollar is going to decline. We're going to see the psychology of a market cycle kick in for the dollar. Similar to Bitcoin. You guys remember when Bitcoin just kind of did this for a little bit and then it fell off a shelf down to $3,000 and then worked its way out of there? Do you think something like this would happen for the dollar? Because if I go back to Bitcoin's chart, look at this on the macro scale right here. The dollar's looking somewhat like Bitcoin during the bear market of 2018 right here, right? December, and then we went into January of 2018 all the way down here. I mean, if I were to, this would be pretty crazy. If I were to trace the bars pattern from the high down to the low for Bitcoin, and we move that over to the dollar and we see what that looks like, do you think we could see something like this where this roll around for the dollar just gets dragged out for an extended period of time, followed by little quick rallies up to the 200 moving average, followed by rejections, flatlining for the dollar, and then we go into the new world reserve currency by 2025, as the dollar inevitably dies and crashes down? Because we saw Bitcoin's bear market. Well, the dollar's in a bear market right now. And so what would happen there? Well, as Bitcoin rallies up, you know, while the dollar declines, once the dollar sees its rallies, Bitcoin would be declining during this bull run. And so be prepared for massive volatility. I know you're not anyone new to volatility. You're an experienced investor. You've been around the block for a while. You're an OG. If you're an OG, give this video a like. But when you see these corrections take place, you know, during periods of time like this, where the dollar corrects, Bitcoin rallies, you know, when we go back to Bitcoin's price chart over here, even XRP's price chart, we see these massive correction periods during the bull market that we're all ready for. And that's why time in the markets beats timing the markets, because when we see Bitcoin rally from $400 upwards of $700, followed by a 40% correction, and then rallying from $500 all the way up to $1,200, followed by another 30 to 40% correction, followed by a rally from $700 up to $1,000, almost $400, followed by another correction of 33%, then followed by a rally of $800 upwards of $2,900, followed by a correction of 43%, then another rally from $1,700 upwards of $5,000. What was this correction right here? So this is part of the process. What, 30, yeah, 37, 40%, another 40%, then a rally from $3,000 all the way up to $19,000. And so if Bitcoin just holds a fraction, which it does right now, but it's a very small fraction of gold's market cap, you know, arguably Bitcoin could reach $10 trillion over the next 7 years by 2030. It only makes sense to have some of your income parked in this asset class because of the news with BlackRock, the news with Fidelity, what's happening with Coinbase, SEC inevitably going to be approving, you know, a spot Bitcoin ETF. The dollar inevitably seeing the psychology of a market cycle crash, very similar to what happened with Bitcoin almost to the T. It's pretty accurate, right? You see these little recovery rallies right here. Same thing for the dollar, followed by a crash, recovery rally, and then it's just losing steam. It's like you throw a bouncy ball out of the window or throw a cat. That's why it's called a dead cat bounce. Because if you throw a cat out of a window, I don't know why they had to use the term cat, right? But when you throw a cat out of the window and it hits the ground, it'll bounce up, but the second bounce is not as high as the previous bounce during bear markets. That's why you see it just bounce a little less higher, bounce a little less higher, flatline, and then fall off a shelf. And so Charlie Munger said it best: the safest assumption is that the dollar is going to zero in comparison to other currencies. And so over time, you know, I think the stock market will continue to go up. We're going to see a much bigger crash on the horizon, though. It's just anyone's guess on when that will happen. And then that will cause a surge in gold to $3,000 to $5,000. I think gold is going to go upwards of a full extension. Yeah, $2,700 in the near future. And then that would cause a massive rally in the cryptocurrency market. And then ultimately economic shift over to a country like China. When we see the yield curve inversion flip, then all of a sudden we're going to see pandemonium hit